Welcome to our latest video on the state of the chip industry. It's been a rough year for chip investors, and unfortunately, things may have to get worse before they improve. This is due in part to Micron's disappointing fiscal first quarter results, which were released last week on Wednesday, December 21st. As a result, the PHLX semiconductor index fell more than 4% on Thursday, bringing its annual decline to 36%. This is in contrast to the previous 3 years, which saw the index average a market-shaking increase of 51% per year. But in a typical pattern for the cyclical chip industry, equity values began to decline before the actual statistics were released. According to data from the trade group World Semiconductor Trade Statistics, worldwide semiconductor sales for the first half of the year showed a 23% increase over the same period in 2021. However, the SOX index was down 35% for the year by the end of June. This early decline in chip stocks was due to investors who were aware that the shortages caused by the pandemic wouldn't last and would actually lead to an increase in inventory, eventually causing a slowdown in sales. And that's exactly what is happening now. During the most recent quarter, Micron's inventory grew by a record-breaking 26% to $8.4 billion. This is the biggest sequential increase in inventory the company has seen in a decade. And according to CEO Sanjay Mehrotra, the industry is currently experiencing the most severe imbalance between supply and demand for memory. So the question on everyone's minds is, when will chip stocks hit bottom? Credit Suisse's Chris Casso has noted that historically 2/3 of the retreat in semi-equities occurs before the first adverse news hits the market, and most times they strike a bottom just a few months later. However, he also acknowledges that this cycle is different because it has yet to see a decline in some chip industries, such as automotive and analog. Many buyers in these markets were burned by the shortages and have started stockpiling more items to avoid being caught off guard again. As a result, companies like Texas Instruments, NXP, Microchip, and Analog Device, us four of the biggest chip manufacturers catering to these markets, saw an average 24% increase in revenue year over year in their most recent quarters. Investors may need to see signs of deterioration from these companies before they start feeling optimistic about the broad chip category again. This could take some time, as Susquehanna's Chris Rolland noted in a report dated December 14th that while industry-wide lead times, a measure of the time between chip orders and delivery, have decreased recently from record highs, the analog and MCU chip categories, the latter of which is a crucial component in automobiles, were still 2 to 3 times higher than their pre-pandemic levels in November. However, investors who wait too long to return to the market risk of missing out. According to Credit Suisse's Chris Casso, chip stocks often increase before fundamentals, which is why he rates Micron favorably and notes to clients that in a cyclical area such as memory, we're more inclined to be constructive when suppliers sound this terrible. Before semiconductor manufacturers clear their shelves, chip investors may want to start stocking up. Where do you think the chip industry is headed in the new year? Let us know in the comments. Until next time, remember to maximize your wealth and minimize your financial stress.